Are the Magnificent Seven stocks truly unstoppable, or is a twist coming? Jim Cramer passionately defends the dominance of the Mag 7 stocks, arguing that their performance is unmatched and the data backs it up. Yet, as markets shift and new technologies emerge, will these giants continue to reign supreme, or is a shakeup on the horizon?
The rest of the S&P 500, excluding the Mag 7, 7.5% growth. Oh, that's almost 20 percentage points different. 20. It's incredible. And how about revenue growth? Mag 7 is on track to see 15.5% sales growth. The other 493, 4.5%. An 11 percentage point difference. In the world of statistics, that is simply blow away. You rarely ever see any one group of anything beat the S&P 500 so convincingly. How did they do it? Look, you conclude that the rest of the S&P is just a bunch of losers. Something that's not really true, but it does have a lot of losers in it. The other way is to look at the mostly magnificent quarters we've seen from the seven themselves. So let's do this. Let's go over from best to not best, because I refuse to call any of these the worst. I want to start with Microsoft, because this one has become completely sainted. Microsoft's doing incredibly well on every single phase of its business. The basic enterprise software product is the strongest I've seen it almost since it started. It's aided by rapid adoption of Copilot, Microsoft's AI product. LinkedIn's just doing really strongly. Their video games selling spectacularly. Azure, the cloud infrastructure division, is outstanding with a huge acceleration in growth this quarter. Finally, Microsoft owns a giant slug of OpenAI and its hugely valuable ChatGPT fundraising round at a $300 billion valuation. Microsoft owns 49% of the for-profit portion of the company. I followed this company for a long time, since it came public, even before then. There's always been one thing, one fly in the ointment, one piece of hair on it. This time the quarter was flawless. Yes, flawless. Next best, Meta Platforms. I am agog at the numbers that Mark Zuckerberg's putting up. The most important one not even talked about on Wall Street enough. 3.5 billion people use at least one Meta product each day. Come on, that's almost half the planet. That's insane. The company's printing money, which is why it can go into the equivalent of free agency and hire incredible talent. It doesn't even matter. You can't even see it in the margins. You know that if you advertise with Meta, the ads have more reach than anyone. They'll even design the ad for you, and it will most likely outperform any agency-built ad, although they don't knock the agencies in the conference call. Meta even has businesses it hasn't even begun to monetize, because I think it's so busy monetizing others. Who even knows but how much WhatsApp is worth? Mark talks about the Ray-Ban glasses as the best format for pretty much everything: Facebook, Instagram, WhatsApp, and everything else that they have, including AI. I own a pair. Actually, I gave my wife, I gave my kids a pair, I gave my stepkid, I gave everybody a pair. I just give them away. I don't know. I think that these things are so darn cool. And they, you know what? I never thought they could move the needle, but after this conference call, now I'm not so sure. They could be real profits here for this company. Like Microsoft, Meta's buying a huge number of NVIDIA chips for its AI offering, Meta AI. I don't use it much, but you know what? After the conference call, I'll probably add it to the roster. Third, Alphabet. Google Search and YouTube are doing amazingly well. You know what? I thought that Gemini, their AI platform, would cannibalize regular Google. Wrong. It hasn't. Instead, they're complementary. Business is very, very strong, and Alphabet had a remarkable quarter for all divisions, including Waymo, give it its due, which is building a nice lead over the rest of the autonomous vehicles in the space. Microsoft and Meta, are buying a gigantic number of NVIDIA chips, and that's who wins. Next, Apple had a tremendous report, better growth than anyone expected. Those who were worried about a slowdown in the service revenue stream got their heads handed to them. Cash continues to build. After speaking to Tim Cook before the quarterly report, I got the impression that some good things were coming for AI and the perceived weakness. Tariffs, right now Apple's moved production for most U.S.-bound iPhones to India. But if the tariffs on India really go through the roof because of buying Russian oil, they'll just switch back to China. I'm not concerned. That's right, I'm not concerned. They have the money to do a major acquisition in either or both financial and AI verticals, and I think they're going to do it. Fifth, Amazon. Well, Amazon shouldn't be troubled. It had a terrific quarter, including fantastic retail sales, stunning advertising revenues, decent numbers from Amazon Web Services, AWS. The reason the stock got hit and keeps getting hit is there's a perception Amazon Web Services growth is slowing. It was flat from the previous quarter, and that's being viewed as a real weakness. I'm hearing that Amazon may be market share donor to Microsoft and Alphabet in cloud computing, and they might stay that way until they stop trying to make do with their own chips and instead buy more, yes, of the ones from NVIDIA. I'm not sure this is a totally true narrative because I think AWS did fine, but I do hear about the resistance from young AI developers who are reluctant to use Amazon's platform to develop their own products. I hope management comes on right here and explains more about this issue. Otherwise, I fear that this is an important position for my Chapel Trust is going to keep getting smoked. Help us, Amazon. I know, I'm greedy. Tesla. As a car company, it's a mess. As a tech company, it's fantastic, especially now that the CEO is being compensated correctly with that $30 billion worth of shares. Mazel tov. I'm convinced that Tesla's worth owning for its autonomous driving and robots, but I accept that the rest of the company's ballast right now. Finally, there is NVIDIA. We don't know how it's doing. It reports on a different cycle, with its next report coming later this month. But we do know this. When you hear that Amazon's not doing well enough because it didn't order enough chips from NVIDIA, like all the other hyperscalers, well, guess who's really the winner? NVIDIA. Here's the bottom line. Even though the Mag 7 has one hand tied behind its back with Tesla, we had tepid reactions to Apple and Amazon's numbers. The fact is, these companies loaded with cash, not outrageously expensive, nation states, I call them, with multiple revenue streams and tight expenses, just can't be beat by any stretch of the numbers or the imagination.